How's it going, everyone? This is Israel, your loan officer down here in Southern California, and welcome to the channel. If you're thinking about refinancing or purchasing, you definitely want to stick around. We're going to be covering today's mortgage rates as well as the news concerning the real estate market. Today's a very special day because we had Federal Chairman Jerome Powell talking about what the outcome might be, not only for the year 2021, but 2022, 23, and up to the year 2024. And now the reason these reports are very important is because you can kind of get an idea of where mortgage rates might be heading. So if you're thinking about refinancing, like I mentioned earlier, or purchasing a home, you can kind of see where the market might be heading, as well as if you're thinking about selling your home. So let's go ahead and get started. There's a lot of data that I want to share. If you don't want to go through all that, you can definitely skip over to the mortgage rates and, just take it from there. Okay, so here we go. Federal Reserve forecast, better days ahead. Economists have raised their estimates for GDP growth and inflation in 2021 while reducing their forecast for unemployment as the economy improves. Now, when they say economists, there's actually 17 people inside the Federal Reserve. They all come together and they basically give their opinion and forecast depending on three different subjects. And those are the following: GDP growth, unemployment rate, and consumer price index, or better known as inflation. We're going to be covering all three of these sections, and it's going to be broken down into September, December, and March, as every quarter they produce these reports. So we'll start with the GDP growth. Back in September 2020, they were forecasting a 4%. Come December 2020, they were looking at 3.75, and take a look at this. Come 2021, for the entire rest of the year, their forecast is looking at a 6.50. That's huge. Just so you guys can get an idea, if you Google what's the GDP of China, you're going to get a 6% back in 2019. So you could totally see that at least for the year 2021, we're going to have a robust opening of the economy. Moving forward to the unemployment rates, we were looking at 6.38 back in September 2020. December 2020, we were looking at a number of 5.63, and now their forecast for the year of 2021, it's looking at 4.5%. So obviously the unemployment numbers are going to be coming down, and that's just a reflection of the GDP growth, right? Because there's going to be more growth, there's going to be more people that are going to be required to be employed, hence these numbers are going to be going down as far as the unemployment rates. Now, moving forward to the consumer price index, we were showing a 1.95 September, December 2%, and now take a look at March, 2.40. Federal Chairman Powell basically said, we're going to try to keep it within those numbers. If we start to see that those numbers start going up, we are going to have to raise rates because we don't want this thing to get out of control. And so if you're thinking about refinancing, purchasing, or putting your house on the market, eventually you're going to have to move to another house. You could see the data here. Again, I'm not trying to sell you guys on refinance or, take advantage of these low rates. No, just take a look at the data. We're going to have a huge growth, at least for this year. And I keep saying at least for this year because I got additional information and I want to share with you guys. But for the year 2021, if you're thinking about refinancing, purchasing, or selling your home, there's going to be a huge growth, economic growth. So that means there's going to be either more buyers interested in either buying your home. If you're a homeowner, you could definitely see how that's going to benefit you. If you are thinking about purchasing, you're going to have to, it's going to get tougher. If it's already tough on you trying to get a hold of one of these homes, you're going to be battling pretty heavy battles with other buyers as well. Unemployment rates, there's going to be more people employed, so that's just going to bring more buyers into the market. And lastly, this one is probably by far the most important out of these three, because you could have a huge growth in GDP, you could have low unemployment numbers, but if the cost of goods start going up, which that's what they're indicating, 2.4, then if you were thinking about buying that new home, well, the builder now has to pay more for those goods. Nails, wood, lumber, the whole thing that would require to build a home, it's going to go up in price, and ultimately that price tag, increase of price tag, is going to come back to you. Now, these are on new homes. it's just going to have a ripple effect, because if new homes are raising in price, chances are the other inventory around is going to basically do the same thing, because as it is, there's hardly any inventory. So the little inventory that's going to be out there, if we see those prices rising, well, it's just going to be a ripple effect. Now let's move on to what I kept saying for the year 2021. If we take a look at this, is part of their report, quarterly report, and if we take a look at 2021, we can see the numbers we just talked about. 2022 is right here. 2023, we're basically looking at GDP of 2.2, unemployment 3.5, and inflation looking at 2.10. But this is what caught my attention. Take a look at this. Obviously, longer run, they're talking about the year 2024. GDP is going to go down. Unemployment numbers they're gonna go up, right? More unemployment, the numbers are going to be going up, and inflation is going to somewhat, be at 2%, not as high as 2.4, but still 2.0. Now, if you know how to add, if we were to add 1, 2, 3, 4, well, what's going to happen in 4 years? Well, we all know that elections are basically going to be hitting that year. So it's interesting that all these parameters are lining up. So when 2024 comes in, there's going to be quite a lot of debate as far as the economy is concerned, with the whole GDP dropping significantly. Inflation at 2%, which means the cost of goods are going to continue to be high, and the unemployment rates might actually be staying a little bit higher than they were in 2022 and 2023. So I thought that was kind of interesting. All right, now moving on to the rates. If you want to know what those are as of today, we'll start with the conventional loan. This is going to be a 30-year fixed mortgage with a 20% down payment that is required. Here, you can just take a look at whatever your FICO score is or your credit score is. These are the interest rates that we are offering as of today. Let's go take a look at what the competition is offering. Bank of America is giving us a 3.125, obviously with a FICO score of 740, which is basically what we're also offering you as well, 3.125. Now let's jump on to the FHA program. This is by far the most widely used because it doesn't require that 20% to be able to take advantage of those really competitive rates. Now, mind you, if you have a 5%, 10%, you can also come into a conventional loan, and obviously the rates are going to be a little bit different. With the FHA, you are only required to place down a 3.5% down payment, and these are the rates depending on what your FICO score is. If we take a look at the competition, we have Quicken Loans at 2.875, which is the lowest of the three. Here with us, I really want to point this one out, 740 will get you a 2.875 with Quicken Loans, right? Well, with us, you don't need it 740. As long as you have a 700 FICO score, we can offer you that 2.875 as well. And to finalize, I hope you liked the video. If you did, I would definitely appreciate it if you hit a thumbs up. And if you didn't, hit that thumbs up and I'll promise you I'll do a better job next time. If you're thinking about refinancing or purchasing, you can definitely give me a call at 661-388-7667 and I'll be able to answer any questions that you might have. And if you're a homeowner thinking about putting your house on the market, we have a top-notch team of realtors all the way from Northern California to Southern California, where they will be able to answer all the questions that you might have. Again, may God bless you, may God bless this nation, and I'll see you guys on the next video. Take care. Bye-bye.